Yeah.
Because mostly me, the way I trade, like if I wake up in the morning, I just glance through the 4 hour, the H4 first. There at the start.
Yeah.
H4 to just see if I'll see any solid setups. I don't know if I go to share my screen. If
Yeah,
forgive me,
please go ahead. Yeah.
forgive me this thing we can share
Access. Yeah.
the security there.
All right.
Okay.
We can grab a drink quickly. Yeah.
Yeah. So me mostly if I open my chat, if you here at the come first,
Yeah.
like here to just see if I could see any correct move for here. So me, one of the things I really like about this movie average thing with anything like this, anytime I see any move like this one, I didn't mark them down. Like I see say the form resistance. I always like actually they trade this place like they trade the 4 hour. That'd be why this they help me.
So
Actually they trade this
what
place
time
like
frame this one be before others?
no, this is the 15
Oh,
minutes
this
one.
15. Yeah, exactly.
Yeah. Yeah, I don't go if you handle the stress of the 5 minutes until so I always they stick to the 15 minutes. So me, I did trade the 15 minutes, but I trade them like the 4 hour.
Yeah. Oh, okay. You did look chart patterns and candlestick patterns.
Yeah. Then the resistance, especially, we are mostly the focus on bearish moves as well. I
Yeah.
only the trade bullish move if maybe I see the bullish move from my H4 already. If I see the
Okay.
bullish move from my H4 already, they're cool. I'll go focus on that for here. But if I don't see bullish move from my H4, I know they stress over bullish move. I'll mostly look for bearish moves. And then one of the things I actually like a lot is when I see anything like this, when I see an initial resistance like this. Mostly me and if it sell for ESF. So even if you go stress, I'm not seeing my stop loss be just this thing. It not be anything I'm not going. So this place actually they help me make if get tight stop loss. So even if the trade they consolidate self for all these
just
places,
chopped.
It break. I just relax. So it break no, then me down just come out.
Right.
Come out like that. So one of the things I actually noticed about this thing to be saying, mostly if the markets come out first, especially if it comes very early, if they go back inside again, go touch either the moving average or the Asian low, and they come back down. So mostly it comes first, I just they take my profit. So if you go back inside, it be another queue
There
and
you
they
go.
take me.
Yeah.
So I actually watch this thing and I see plenty ways they do they act. So make us see if I will see any of my so something like this. And also you see I enter and I see for you, I expect it will drop. So I should not go one sell from my account and watch
so you enter already.
Yes, if I don't go for my real account yet. It just be my demo account and I monitor the situation. But this be one of the moves that they expect say it will drop. So as I see this thing for you now, I go come my H4 to then can see how the GBP card they look. H4. So now if I come here to use it and I see something like this, at the same time to here they look like support. So I expect say this thing will drop, then it go pull back small. So even if I go trade down for ESF, it be for quick even if I go trade down back for some scalp.
So where did it look to
is,
possibly take profit on this one?
On the moving average thing.
Yeah, so like with this move, no, where you did lose to take profit?
Or usually I just want to make it come out kicking. So first I check the pips. So easy say I check the pips out. So I know at least I fulfill bank some 30 pips for this move.
30 pips, I see which one, yeah.
30 pips. Where if I don't want set stop loss, realistically I just put my stop loss for the moving average.
At the top.
So I just go drag this thing, come here, then my stop loss just the here.
The top, yeah.
So this be one of those 1:1 moves. 1:1, 1:1 moves.
Yeah.
One of those 1:1 moves. Will be easy. This thing it be easy to make on the market. So me I actually monitor them. When you watch this thing, so they look like the rising wedge. This be perfect example of the rising wedge we also talk about. This is a perfect example of the rising wedge. So even on a normal, more people will sell. Go wait to make it break the low before they go sell. They will wait to make it break this line before they go sell. But I mean, if I enter for you, I don't say here my risk below because me are jumping for it. My risk be extremely low. But on a normal, so you see here to at the trade them like H4 because if you look at this region, they look like candlestick confirmation. They look at some morning star, bearish engulf, evening
Yeah,
star,
yeah,
bearish
yeah, yeah.
engulf. So on a normal, this is one of those setups I go trade on my own. Where this one I don't really go give them signal. Mostly
Of
the ones
course,
that they give
because people not go get them. Yeah.
yeah, the ones that they give us signals be the one that if you explain them for my H4 top.
Yeah, yeah.
If I go see corresponding move for my H4 top, I just go catch them for you. So on a normal, I always they watch the two. I they watch here, they watch my H4. The H4 there, you know, every day you will see solid move for top. The H4 be with the normal moves they understand, support, resistance. Trend lines, with those things we they watch for the H4 top. So if I don't see anything like that, it means that the whole day they focus on this place.
On this move.
The whole day they focus on this one. So this one you watch them, you go see say be perfect example of them. So I they trade them like the way I they trade the H4. I they trade them like that. Some patterns, plenty patterns the way they watch, especially here like this. You see, he come out, he break the moving average, he come out. He come back and hit the moving average and they sell. That be one of the ways I
it
like
hit the moving average now,
they sell. Yeah, where sometimes too. You see example of place like this. You see where the moving average day. When majority of the time, like 85 to 90% of the time, in a day, the market always detach the moving average.
It will come respect before I go do it.
So now here, I make skeptical the what if it comes from this thing, I go buy expecting say go can't
touch moving average.
Expecting say go can't touch them. So I do have to watch. I really do monitor a lot of things. We this pattern for year this be one of those things I always like to look out for as well. You know, this is one of the things I always like to look out for. Especially one of the best things to see be if it consolidates, especially if it consolidates under the Asian low. I don't know if I will see example if the consolidation happens right under the Asian low. So you see an example of this place like this. You see it consolidates for here. It just confirms that the thing could drop, but it should not can't touch the moving average.
Before.
You want them to they look like resistance. So like the same, I always trade this thing like H4 here too. And they expect similar thing for here. You see the way they behave for
here. Like some double top.
It'd be very advantageous if the Asian range be small, big. Because that one, you free risk then you free risk comfortably because the Asian this thing is small. Here like this will be very small. So if you know see your stop loss day right at the low or right at the high, so if you handle playing. So I always combine the two. I know they stick to one. So I should say on a normal the H4 they understand almost everything for the H4
of course,
resistance. With that place,
because my frustration with the H4 is that when I do this thing, let's say I take one pair where they do back test on them based on H4. It take ages before they get moved. That's the way it feels.
One funny thing to see, I know they do back test, like I always focus on now, presently now, like what.
Do you know the reason why I did do back testing? Because I don't know the game. I've not been in the game for a minute, so just to jump, blindly. But go on,
So me mostly I like this. So my back testing be mostly teaching. If I teach, that be how me because I get opportunity to teach plenty people. So they help me. Make I use that medium as my back testing because I get opportunity to teach so many people. So they help me make I just go back there and they see that I remember more, take trades I take and things. Because if you watch, I come the H4 again. If you watch the H4, like one of the best pairs to trade, not one of the best pairs to trade, like last week or a few days in a row was just in the Euro card. That be like the best pair to trade because it started from here.
Well, go in and then they touch and they come. They touch and they drop.
Yeah.
I see that.
They give nice confirmation for here, then drop come here. Here to be Fibonacci zone. Nice confirmation for here, then rise come here. Another Fibonacci zone. And drop come support. Nice confirmation
for here. You go pull the clips and explain make us see that now.
Okay. Let I use this zone first. So here like this, as it can this zone, like you know how we do, and we just put on a horizontal ray for
horizontal ray
for make I bring it to this side. Horizontal ray for here. And then the one at the bottom as well. Then we just watch how the markets they react before we go to side. So first candle come. So what's the moving average thing? What's it actually really they help make you do? To be able to catch a trade in an area like this. Because on a normal your H4, before you go wait with the candle close, but you
to
go
close
see
it go.
nice resistance for your moving average stop. That was most of the moving average, the trace you go catch up. You go see say you go catch up for like prime entry where people go think say you just jump on and for they never go understand say that's why we know they give the
no.
to give them out anyhow. So here like this, but we don't get confirmation yet, but you see the consolidation data. So mostly if the market come arranging, but then I use the rectangle shade like some parts of there say like I expect the consolidation for that. So now I just wait. If I get consolidation where I get confirmation and bearish presence, I just will jump in. That'll be how me my trading day. Stress plenty over. So now first candle come, second candle come. So now you can see we have our morning star. Sorry, our evening star. We have our bearish presence as well. And it's not too far away, so it's very close to where the previous consolidation. So we go for jumping. So now if I jump in for here, where am I? This thing there. If I jump in for here, I'll stop loss just be right on top of the range for here. So it's about 41 pips. So if I expect the whole thing will come the bottom here, realistically, because realistically you know say trading if we're always realistic. As you see first consolidation region for here, you know say at least if you go set multiple take profits in here, that your most important take profits for be here, then here it no really be relevant because you go to make your money by the time it gets
just by those time,
That's why I mean, so me always be realistic. Always my first take profits be my stop loss, like how much I risk. It's always my first. I always precise the next one is at the next support before it comes to the bottom. So usually if I hold a trade here, it means that I have a relatively small lot size here, but because me I don't really they swing more positions like that. I focus on the day trading moves. So now just want to now we get our entry, we get our stop loss, then everything. So now first candle it runs through, you hit that take profits. First candle alone is how many pips? First candle 50 pips. So if you talk say you finish, even if you don't get the whole 50 pips, you hold the trade, make it close. But wait, this one today be afternoon. So you hold and make the candle closer. You've made your 41 pips back. What you risk. So you're already done. So this one, it was at 10 o'clock in the morning, meaning a candle close at 2. So now you catch that one. If you want hold, that make it go your second take profits too. Now we just want to see how the market. So you see, say it smashed the second take profit. So now that be also realistic. You know, so you make your money finish. But if you want hold, come here, we no close any of your profits.
The risk. No.
That be when it will just disturb you. Where the funny thing is that same time too, I traded GBP card. I finish, I will go open the GBP card, maybe watch it. I traded GBP card to the same day this thing happened. I traded GBP card and then USD card as well. And then the good thing was there was Canadian news. There was Canadian dollar news that day. So that was what caused the move. The whole day, then the thing they consolidated. So as I can say, oh, news day on Canadian dollar, there was CPI. I say, oh, then make I just relax. You go push up. It be dollar news way, sometimes it be stubborn. But GBP card and Canadian news, then Canadian dollar, they mostly use the other currency pairs mostly, then they respect them fundamentals. What they will talk say, well, what's the news they tell you say then go do, then they do them. But dollar tell you say this be what will happen, then crazy things they happen for the market stop. So now you've hit your both take profits. You want to see if it came to this support, so we're able to see if we can catch a buy. The good thing about trading, you see, the reason why we did Fibonacci and all those things is because if it doesn't get here and then reverses somewhere here, you can use your Fibonacci to monitor the situation and then catch that move as well. So now we watch the next candle. Now let me remove the risk reward. So you see, even here be some initial support, but so you just can't rest. You see, you just can't rest for you, indicating here has your initial support. So now we break and go down. You want to see how they can. So we got very extremely close to it, but so once so you just there we it start the consolidate for that. So around as it start the consolidate for that, now we just go plot on our Fibonacci here to here, see. So now the flip just like here to here. We just want to see whether Yeah. So you realize that
like the
that's gonna
78.
exactly 78%. So I don't want to make the flip cover the whole. So you remember this thing we do.
Yeah,
Just
box and then for a line.
On it, then a line there. So now you're just looking at the whole zone instead of stressing too much on the individual levels. If you just remove one of Fibonacci now, so now this box be here. We all see how you continue to be. So if you say just run through for it, if you get your entry for ESF, you just run through how many people you did on this thing already. So then we back to back to back to back. So then sometimes if you make lucky, then they respect
the whole moves,
They respect the moves like that.
They come again, give you another opportunity.
Come again, give you another opportunity. So we want to see how it continue. You see, around that side now, I give another Fibonacci opportunity again.
Yeah.
It drops. So this one can be from here to here. Then the reversal is here, where it drops straight. But this be one of those things you will miss because you don't really go get a confirmation for here. But if you did a moving average, the Asian range top, you go to catch this round. So that what mostly they do. If I see anything for the H4 top, I not say this move, it really they can't happen. But I know get confirmation for here. You know, they make sense for here. It'd be difficult to trade for here. Then I just switch camera, moving average. I watch how it behave for that. That'd be how they do. So I always they compare. I always use the two in confluence because mostly people say you won't catch some trade for here, but you not see this trade for the H4 top. It behave a bit.
It not be clear.
On a normal year, you don't see this thing go drop, but to get your confirmation, to get a solid entry, and then all that might be a problem. So now that's when I just switch and come to my MT4, then I come to the Asian range. I know on the Asian range, I'll get something solid and this and then be able to trade it. Because anytime you see a long wick, I don't know if I've told you before.
Pen like that, the pressure down.
If you go to the lower time frame, it mostly be some tweezer in a form.
You talk that,
So anytime I will see something long like this, then I just switch to my moving average, the Asian range, and I just see how the market is behaving there. So over there now, if I take any trade there, I know 20 to 30 pips is what I'm expecting. But if it goes more, fine. Because you know on some days, GBP, USD, gold, it can give you plenty.
It can give you a lot.
But if I'm just jumping in there, about 30 pips is my average. I'm not stressing over too many pips on about 30 pips is my average. It's when I combine it with the H4, that one, I go for long-term moves. But if I'm watching it for only I just want some quick move. I have my target, I make the profit, I'm out of the position. So here, you see here right now, you can't respect this support. You can't respect this support again. So once you start to consolidate for the right now with this way you say it creates this bearish and bullish engulf or morning star for here as well. So here we give this entry. But one thing about bullish moves, we say you will see the confirmation, but the market, the candle open and the market they try and misbehave small before you can push it so here you try push and come down small. So the good thing about this particular thing is if you really understand how the time and better, if the candle push and come down, we start to pull back with the candle close now, you go enter for it. So that'll be how me I trade bullish moves. Bullish moves, I always once I get a confirmation, sometimes the market goes quickly, but other times not at that time, most times for bullish moves, especially support, it will be easy like the way resistance, just go catch them then. After the confirmation, they just draw for you. You go see, you go enter at the first confirmation, then the candle go bring you down, bunch of drawdowns before you go up. So I always wait
the wait drawdown out.
So here like this, I don't jump in immediately. I actually waited for this candle. So you see, this thing it do. Once the pullback ends, the good thing is that usually most of the time the pullback ends halfway. When it ends halfway, that's where the next candle comes. That's where you should actually jump in. Or if you're already here,
so as it was forming
position. So if you're already here, if you're already in the position here, it means that once the pullback closes, that's where you should add another position because that's where the bulls have actually gained control, have actually gained momentum in the market. So that's what me how they do. Mostly, I even they prefer if the whole candle drop comes somewhere here, where you pull back can't reach here, where you close If it close for that,
so
that will
you the wedge make the candle close before you go jumping, or as it draw come the halfway.
Usually, if I jump in before it closes, it means 15 minutes to time. It means you are not seeing
very close
being
to the
finished.
time.
So 15 minutes to it being closed, and that's why I jump in. That way, at least it continues to pull back to take me
pull to the direction. Yeah.
The next one to come. So most of the time, I actually even like it when the pullback doesn't go all the way up. It just pulls back to somewhere here.
To somewhere
and
there.
And next candle opens, so just take me then close the whole candle.
At least, yeah.
Up that way. That's how this one. So that's how I like targeting my bullish moves. So if you watch, that's how this one also did. They just started acting down and just boom, it went up. So here your entry was here. Your entry was here.
Yeah, just right under the candle, yeah.
Entry was here. You're placing your stop loss here as well. You realize that stop loss is also right at the bottom here. Same thing we said about the take profit. You know it's coming up, but it's better you know where the consolidation zones are. You know initial point is here, second point is here. So like I said, the horizontal rate, initial point of resistance or rest or whatever is this place. The second one is here.
Yeah,
you know your third one, it's coming to the resistance. So that was how I actually traded this one as well. So now it acted as if it was coming down. Then what did you do? So now it just hits the first take profit. So now you've made you
covered your risk.
You covered your risk already. Then the next one also hits
second one. Boom.
Covered a particular risk already. And the next one, it goes to the resistance. So now it has gotten back to your resistance. So what do? You just adjust your line and then bring it here. Like you have here. You just adjust the line. Then I just bring my this thing out around this zone that I'm expecting. So even this Euro card, I actually traded it in conjunction with a moving average as well. Because the time, so I was in there before the confirmation came on the H4. I was in the, that was the advantage of using the moving average. You will be in the position before the consolidation comes. You'll be in the
because you see the cross on the smaller time frame.
Yeah.
And so then you are trading it just like candlestick patterns on the H4 anyway. So you get those confirmations. Yeah. But how do you comment? Did you see something on H4 before you went there? Or what did you do?
Once it came to the H4, I started monitoring the 15 minutes as well.
Oh, together. Yeah. Could you normally say open the two together? Yeah.
Yeah. Open. So I opened it. So I always have the two together. Okay. So once it got here, I was watching it there as well. I had my eye on it there as well. So the next candle, that was what even did it for me. The next candle that looked there and then came exactly there. And the next candle came exactly there. So look at all this one. So the funny thing was, when I saw this candle being a bearish candle, that was where I jumped in. But on the H4, this was the entry. So I don't know if when I give the signal out, this was the entry I gave for the signal. The signal,
and the other thing too, how are you able to give like specific price like this, going at this price? You know what I mean?
Yeah. So for that one, usually it's when is the price which I enter.
Yeah. Oh, that's you entered.
That one usually on a normal day, I'm not even supposed to give the entry price because everybody in the time they jump in. So everybody in the time, yes, I use it to monitor the number of pips it has moved. That's why the entry price. I use it to monitor the number of pips it has moved. Because this one, I was waiting for the evening start to form, but I didn't want to risk it and have this candle close somewhere here. That was why I came to the. That's why I came to the. So now let me show you what I saw on the moving average as well. So this was it. Can you see my screen? This was it. So it was this consolidation I saw here. It was this consolidation I saw here. It was this. So the entry, my entry was here. My entry was right here.
So it was up before it touched the moving average there.
That was really one of the best things. So I gave the entry before it did this whole consolidation. So once it was doing the consolidation, I knew once it breaks the moving average, it's going.
Oh, it's going. Yeah.
So I actually on my own, I entered even here. The funny thing was, so I don't know if you saw the screenshot I posted. I realized that my entry price was all the way up in the wicks.
Oh, so up. Yeah.
I just used the wicks to take the trade.
The question then is, what did you see that because you entered far above when it was consolidation at top?
Yeah.
Where did you enter? Just show me again. Where did you enter, please?
Oh, I entered in this candle, in this long.
Or in that candle. Is it when it broke that level, or is it?
Yeah.
when it broke the down level.
I didn't get your question.
I said, what informed your choice of entry? Is it when that bearish candle broke that level? You see there's the left.
Yeah. So this particular question, when it started, because I saw this whole consolidation here. Once I saw this whole consolidation here, I saw this double top as well. Then now I just start treating it like the H4. Because usually we like this price action. When you see this price action on the H4, when it breaks out of it, that's where we like to enter. So once I saw it on the H4, then I saw the Euro card being so respectful to market structure, I just jumped in. So I was already in a position. But when it dropped and came somewhere here, and it came into this candle, that was when I gave it to the channel.
The signal.
That was when I gave a signal to the channel.
And then it just
the confirmation even came in this candle. Like when that particular candle closed, the confirmation was here. So now when the confirmation got here, my subscribers were already in profit. So no one is
pressing. Arizona they come online. Because we look to it's the rise up. Rise up. Ghana internet no be small.
Charlie.
That's in they go.
Yeah, you see, so me that be how I monitor the market. If I see, I'm like, so I enter anytime I watch the market, then I go come my demo account, then I go watch the moves that they expect say, then go do something. Then I just enter or set pending orders. So most of they like they use pending orders on the they like they use. So if I the expect say go break here, I just go put some sell stop below it here.
Yeah.
So the funny thing is, if I put the sell stop for there, I not see the market here. If you can form resistance for here, so I put another sell limit for here. So now if this thing reverse, we can form resistance for here where they drop. That when I will give them signal or I go fit trade my own thing because this thing I've just done it for my demo. So that be when I go fit jump in for here, expecting say go fit can reverse for here again because the rest of the day here. This thing closes at 9 p.m. So usually it mostly comes back into the zone again. So it's even good if it comes into it this morning because that if it comes back into it this morning and it's coming back down, you can now just enter, you take your profits out. And then this thing also helps you take continuation trades. As in the thing dropped already, but you consider this as another whole day. So you go first catch another sell again, make it continue to drop. But if you're on the H4, you go feel so the whole thing drops, so you can't enter again.
Yeah, you can't enter again, of course. Yeah.
And here on a normal, you go fit treat them like that. You go fit treat them in that way, then you go fit enter again. So me that be how. So here's the whole consolidation for here. That be what I use. So once it finishes, so anytime I like looking out for this pattern on my moving average. I like looking out for this pattern as well. So on a normal, this if I see here, I go enter.
Yeah, of course, yeah. Because you go break for that candle, that black candle.
Yeah. So I know say at least some 10 pips there I go make. So on a normal here I go enter because I use this as resistance. Then I use this kind of say confirmation. I just treat them like the way they treat my H4.
H4,
I treat them like the way they treat my H4. So I use my resistance. I just use my candlestick confirmation. So on a normal, I enter here. Once I enter here, I can stay in the position and relax because how much stop loss? It's just here up to here. It's 11. It's small. It's not too much stop loss. Will give me less nights. I know I will be handle the stop I will do. So right now, this one I just do for my demo where they wait to see how the markets will behave before I truly go jump in. I only jump in straight. Yeah, I only jump in straight into my real account if I see something like this up there.
Yeah, something clearer.
Usually, if I see something clearer like this up there, or let me see if I'll see the GBP card. It was USD card. The USD card I bought. But like on a normal, that's what I actually look out for. So you let me come back to the H4. So you realize, I see the thing for the resistance. So on a normal, on the H4, I would have waited for the confirmation. But because I have access to this, I was able to jump in way before the confirmation. Because sometimes you wait for the confirmation, then you realize that the candle will come and close here. The candle will come and close. This particular candle might come and close somewhere here. Then you've
somewhere there. If you go back to the moving average, make I ask a quick question here.
Okay.
Trading based on this thing, candlestick patterns before the cross of the moving average. Yeah. You see, when you come to the right, you see that funny spike up and spike down.
Yeah.
In that area, where would you have traded?
Oh, here it was. here it was let me see. How will I even explain this thing? It was the day they released the NFP.
Yeah.
The NFP is what brought it
Yeah.
down.
Hold on 1 minute, Ishmael.
Okay.
Yeah, I'm on Zoom in a meeting, in a quick meeting. I'll finish in about, let's say, 10 minutes.
No
Yeah.
problem.
Okay. Yeah. Go on. That'd be NFP. So of course, yeah, that one is not non-tradable. Yeah.
Yeah, the NFP bring up back. So even the good thing is the candle close for here now, you not say NFP. So you go just catch them back down.
Yeah, catch. Yeah. All the way.
But on a normal, people want to be on the safer side or just
On the
place
safer
their
side.
on the moving average. When it hits the moving average, it just takes it down for them. That one, they are on the safer side.
So I've seen, if you are even trading this, then you either get a clear chart pattern, follow it, then kind of candlestick pattern, then you go for even trade on the 15. Easy.
Yeah.
Easy.
Yeah.
And so with that, is it only when you're confluencing with the H4 where you wedge for the break of the MA?
Oh no, me the everything as I start, they actually the wait make it break. But now think of I treat them like it be
the H4, no, yeah.
I treat them like the H4. So another way to make
so you just look chart pattern, candlestick pattern, boom, no, and then you go inside.
Yeah.
But then your targets be relatively like scalping type of target.
Yeah. So even what I just talked about, that's if it's huge like this. But if it's small, that'll be when they consider the break, they watch the break.
Yeah.
Because if it's big like this, I can catch for the break. My stop loss.
No. Yeah, we did the top though.
So if it's big like this, I actually they analyze them for inside. Then if I catch for inside, I now see if it drop can be
to the end.
If it comes, it be small stop loss. But if it's small like this, that will when I feel wait for the break. So you see here, the reason why I go for demo because they expect say you go study misbehave, they do this. So they watch you can do all this thing finish. Then if they break, I enter. But they expect say this thing will come back here again before it go drop. So if it comes to the top where I see some sort of resistance and a confirmation like this, that'll be when me and Ankasa I will jump in
go straight up Ankasa.
But this one, because it no go make sense, it no go make too much sense for the H4, I no go give them a signal. I don't really do straight I go trade my thing independently, like from
independently.
So here, So on a normal, the after the moving average, once it breaks it and I see a solid candle like this all the way up, I know it's going up. So I can just jump in, make some profit, then I'm out of it.
And then
so usually before scalping or just some quick day trade, intraday moves, that'll be how I trade them. Because it has broken out of the Asian high, it has broken out of the Asian high. It was also breaking the moving average. And then luckily from the candle has closed right close to it. So here for the intercept, I just if you put my stop loss right on the Asian high.
Yeah.
You understand, right? Or if I monitor personally, where the position is not plenty, I will decide to say I'm not going to put stop loss, but I watch them. So anything I decide real time because this one I won't close early. You understand? Close early. So realize that even within 30 minutes, how many pips do we get within 30 minutes? Within 30 minutes, we get 30 pips. So you could just end up.
Yeah, for that.
I'm saying if you just end up where mostly if you go to if I won't watch where it go reverse or where it go turn for, I just come back to the previous. Yeah. So that was me. I actually they trade down like the H4. So I always they come back to the previous resistance. Can't watch the see. So when I say the same turning point, they get down for here and here the previous day. So now they expect say if this thing will reverse, it be here and also this reversal NFP conform plus this resistance at the C for
turning point.
Either I they trade down to the moving average. As in my take profit is on my moving average when I sell. Or jumping in here and or I'm placing it on the moving average. That when it breaks the moving average, I'm selling. So but here to some small consolidation happen, but I know the plenty pips. But that one alone be 20 pips. The pullback it happen for them like 20 pips.
Yeah.
Because the whole thing is say you don't know when this consolidation will finish. You don't know if it talks say you wait to make the consolidation finish
before. Yeah, of course.
Because you don't know how long it will take for you. Maybe you wait to
like so the question we say once you imagine you play straight for there, what will go inform your stop loss? What will guide you?
Yeah, you just the scalp. So like You just the scalp. So you just set some quick tips and you go closer.
Yeah, but you don't put stop loss on top.
Yeah, you have. So that was on a normal, I would have just entered here and then placed my take profit.
Oh, yeah, take profit down there and then
that's the best.
let it right.
So either my take profit is on my moving average or on my Asian high. My stop loss is right here. So I'm just risking.
Yeah, yeah, that pips.
For this setup. That's the best thing to do. That's the best thing to do. Because you realize that now you have a resistance, you have a candlestick confirmation. It's the same. That's why I always talk say what would they do for the H4? You do the same for all the time frames. But the problem is if more people leave the H4 than go other time frames, then they ignore every single thing they learn for the H4 top.
That's the problem.
That's the genesis of the whole issue. If somebody left H4, they ignore support, they ignore resistance, they ignore the chart patterns, they even ignore Fibonacci. You go even if you use Fibonacci for here. And as if you watch here, this place, you go easily apply Fibonacci for here. You can easily apply Fibonacci for here. This place. You can easily apply Fibonacci. You understand? You can easily apply Fibonacci. You understand me? But at the same time, you don't respect the Fibonacci, or you don't see what they respect support for here.
Yeah.
So they use this place as support, then it go come here, can reverse, come down, or if you break the Asian high, you're expecting it to what? That's the break it and go all the way up because there's no sort of resistance here for it to use to up and come back. So if it breaks out and you see a full body of the candle closing above the Asian high, you're expecting it to continue going up. But the whole point is, I don't go stress trade that buy because I don't analyze for buy.
Yeah, of course. Yeah.
I don't analyze for buy, so I don't stress too much. But if you go watch your H4 and you will see the Euro cut almost they look like you won't buy for that particular zone again. But I just go wait for the 9 o'clock candle, sorry, the 10 o'clock candle before I will decide.
Of course, they're closer.
Because they consolidate for along that support again. They consolidate for that support again. So I just go wait for the 9 o'clock, sorry, the 10 o'clock candle before I will actually decide. So it'll be the same thing. Like the whole problem be if people leave the H4, all the concepts then they apply for the H4, then they leave all for H4.
Yeah.
They can't use them own principles for the 15
and then
minutes.
That will slash you.
That's where the problem. That's where the problem. Because if you apply the same,
I have the oligram.
Yeah.
So come on. With what you are saying, you for use the H4 concept,
for here.
When it comes to the 15 minutes.
Yeah.
The same
so that one, So that one, they make them easy for you because now you not just the trade stick of it, they wait for breakouts. You not just the trade stick of it, they wait for breakouts on the moving average or on the Asian high or Asian low. You actually they analyze them. You understand? Because on
really they analyze them. Yeah.
Levels. I use my. You understand? Here I use my some sort of resistance and then I know talk to trade down for here. But as I see this candles engulfing here, so once I see this price action for here, this thing like the evening star, that will me I'll take enter. So means if I don't see them early, but luckily for me, I can meet them. Then the candles still the form way they here. You understand? The candles still form way they where I just enter for them. So as the drop can reach somewhere like here, where I watch for the H4, where I see they look solid before I just give the signal to my community. You understand me? But even aside all that, somebody still go to see chart pattern for here, like bearish flag. You understand me? Break the moving average, it just they go. So it just they apply the things you've learned on the H4. So you realize that now that person can just be waiting for it to just break the moving average. Then the person buys, the person sells, but the person has the confluence because the person used the chart pattern here. The person used this rising wedge, or you can call it a bearish flag. The person used it in conjunction with the chart pattern. The person used it. So once the person used it, the chart pattern, and then the moving average was here. Once it broke it, the person they just it activates the person depending on that. Then the person just do what they do for the person just buy. Sorry, the person just sell. You understand? So you just apply the concept you've learned on your. You see, if you watch, I'm just to look out for anything you've learned on the H4. That's the trick. Just look out for those things. You go see like it go they make more sense. It don't be so like it go stress because me too as I start the trader. As I start, they apply this. So then I just wait for breakouts. So every day, as I start, you go see to your first few months, it go well for you. But if the market starts the misbehave and things, you go see you trade the breakouts, then the market will come back into the zone again. So now if the whole Asian range will be small like this one, they will chop you too much. You see example of what they are talking. Are they especially if you come here, can hit here, then reverse or break them, then go. So if I go take any order, I initially the set orders on my demo account, then see the whole price action and the way the markets will behave before I go make any decision. I started to see the whole price action before I go make any decision. Wait, this one, if they apply the break, I don't know if we did. I'm sure we did breakout and retest. The breakout and retest. So it's the same break and retest you see here. So you realize that here the initial confluence is break and retest. At the same time, the reversal happened at where a resistance you see here. Then you have a bearish engulfing here. So now you go just enter your entry day here, your stop loss day at the top of it, which was less than 20 pips. Then your take profit is on the moving average. That's also more than 50 pips. So now you jump for here, your take profit day, your stop loss day, so you'll be protected trade. So now if you can't hit your finish, that will be when you go take your profits, then you go leave the rest. See, because the thing about NFP or days with fundamentals day, they say usually if you mark like 3, 4, the market do what they do finish. It will go in that direction. The market will close. It will go that way. Usually the best times you go if you hold trade be in the evening because the markets do what it will do finish. So now
so
if there's no impending, if there's no impending fundamentals coming, you go just go if you hold the rest of your profits. That's if you want to hold. But if you don't want to hold, you just make your quick money and then you close your trade. You understand? So me, I always actually if I know they combine them, it means even though I here, I apply my H4 concepts or everything I learn. If I see them for here, they apply them like I see them. Understand? They apply them like I see them. So if you watch this side set, this is one of the Fibonacci, the ways you go to use them. Usually, if the markets break out of their range, if they do this, they come back and touch the low, then they go continue to go back up. That change the color. They can erase them. I will search some for the bottom, then I will show you. Like example, like what are they trying to be something like this. Something like this. Like especially if the initial break happened for here, maybe very earlier. If they drop initially, then you come back and touch them like this. Then so usually that coming back to touch it, you will see sometimes if you coincide with the moving average for around here. So that coming back to touch it, you miss the initial one, but so mostly I think miss move that the praise they make just come back and touch them.
They come back and rest back.
Once they can't rest for them, I see bearish presence, then likely see some confirmation or at the enter. There was one I search for. I don't know if it be AUD USD.
Come on. With that one, where you go put your stop loss for?
Oh, that one, there's of you the catch for the range stop. Your stop loss will just be somewhere very close to because you the catch them for the low pepe. So the lucky thing is that sometimes to the moving average for day above and like this. So if the moving average day above and that will when my stop loss just on the moving average. And so just go there. I just watch the number of pips. Once I go free handle because you will realize that sometimes you go put your stop loss for here safe. If you check the whole stop loss, you go see sometimes the whole thing be 30 pips. That be if you know big. Understand? I can check the pips for the whole thing. You see, the whole thing with 24 pips. So here, I'll go put my stop loss for here safe. I know the stress because I'll go handle 24 pips. So I know the stress. You understand? Just say this thing they help you make you risk small for a lot. So this pattern to be very, 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 very important pattern. If you watch the same thing happen for the but here the bullish. Here the bullish. If you watch it, you see here to break out initially. So you understand? We come back and touch them. So it just be the wicks they enter. That's why I don't consider the wicks. We see where the moving average day to. You see the moving average data there now. So now once it goes back, I see this closure for here, my entry day here. So if my entry day here now, either they put my stop loss here, but here it will be like 5 pips. 1 week if you can come on to me. So now I just calculate the whole thing. If I calculate the whole thing, it be 30 pips or below. I go to just put for here. You see, now the whole thing be 22 pips. So now my stop loss go to just day the support. My stop loss go to just day the support. And they see the moving average for here. Meaning say they expect it go break them. It break them just they go up. So we break up just they go up. So this like you for always trade them like the way. So you see, even though these lines they show you what the markets they do in a day, you still they apply your same H4 concepts. As long as the concepts they your head inside, that'll be the whole issue. If the concepts still they your head inside where for struggle to remember them, you will see if you apply them easily. But this be very, very important pattern we are always the use, especially initial move. Once I get an initial move and I miss it, I just pray it comes back to touch the Asian high or the Asian. If it comes back to touch it, I now decide what to do with it. So if it comes back to touch it, sometimes you realize that a moving average can also even be here. Then it goes back. It means that it's going up. Sometimes the moving average is here. It means that once it breaks my moving average, it's going up. So I'm buying again once it does this for me. You understand me? I want to check ADUSD then. Then I see similar this thing on. I'll make I show you this. Watch this ADUSD. This will be one of the perfect breakout scenarios. But mostly if you miss this thing. Because this two happened the same time they released the NFP. So the NFP did drop here. So NFP 60 pips, you didn't miss them. Unless you watch and you target this move before the NFP they come. Understand? If they target them before the NFP they come. But on a normal
so question, how you if you monitor multiple pairs at the same time?
Oh, for me, I just like if I open my Asian listing, I just go through one after the other. The ones that they see something solid on, then I just place pending on that. I just feel like this. If I expect it will go up, I just go through right click. Then I just
and then place all that.
I just put for there. That way I not say they part of my favorite. So after that, I just drag and I group them together. Like if I see something on GBC, I just drag them together. So the ones that they see something on now, them all did the front here.
Exactly.
So I have them here. At the same time too, I've gone to my H4 and then I've placed a red flag on it. And so at the same time too, I just go come with a red flag data. So even if it be difficult for me to keep up with them because the way the PC day, you don't really go see them like that. Now I just come to my H4, I see the flag here. So I'm monitoring it here. At the same time, I see the flag on them here. So you realize I just put a red flag on the red flag, red flag. You understand? That is how me I mostly did. So here, if you actually want to stay on here, then you don't go stress about the H4. Just apply the same H4 principles here.
Yeah.
That one you don't need to include the H4. But if you're not applying the H4 principles, it means I should combine them. But if you're not combining them, just apply the H4 principles on it, and then it will be it will be easy for you to navigate.
So assuming that we are trading the same style, you see the H4 like the levels with the put for top, double top, like those areas. You also say it is advisable to put those same levels on there if we are trading with the same concept.
Oh, I understand.
Or that one, we are looking at this thing, chart patterns and then moves, chart patterns, candlestick patterns, and then
for here because it's like intraday. You go see the whole level for there. So there's no need for you to even draw. Because here you can see it's a support. You can see it's a support. So even without putting the level there, you know it's a support. And then the reason why it's difficult to do here is because on MT4, usually when you draw something, you come back, it's gone. You realize that all the things
of course, you
come back, they're all gone. That's why we like doing those drawings on the H4. We've come back, they are all gone. I drew so many things here and then we've come back, they are all gone. That'd be how it did. You go see, it will come back, then it go. Even make I show you the AUSD against them. This be another rising wedge it formed. The rising wedge also formed right on the moving average. You understand me? But on a normal, this particular trade set, me I enter from here. You see, so me.
It's like you did share the front screen of.
Yeah. Make I go back to that. Yeah. You don't see my screen now. So like I was saying, the how do you call it? This is the ADS. You see this rising wedge here. You can see this rising wedge here. So now you know on a normal, this is where like you won't enter. Where the rising wedge also happened right on the moving average. You can see it on the moving average. Right on the moving average. So now once it does this, say you break the moving average, you enter. Just want to see it break about. So on a normal, if you day by the market, the break you go see for here, then you go enter. But if you know day by the market, maybe you can't see the break for here. If you can't see the break for you, then maybe you miss out on a lot. So, like I said, I treat it like the H4. So, me on a normal, my entry will be
here. Inside,
So, as this whole consolidation is happening, I'm still in profit. So, I'm not
still in profit,
because you can see a resistance here, you can see a candlestick confirmation. Because it's a lower time frame, you can actually wait for another candle to also close, so you have a confidence. Because if you lower time frame, you say if you be H4, you don't go if you wait for another candle because
no.
Where your stop loss go day, maybe it go be too much to the move go exhaust. You waste time. You understand? The move go exhaust, then you waste time. So it'll be one of so now as this whole thing happened for here, you enter for here, this initial drop already. How many pips is this? About 15 pips. At least that is something cool. You're doing some profit already. So once you start doing this whole consolidation, if you this whole consolidation stuff from your entry to this place, it's 25 pips. On a normal, somebody will talk say you close some. If you come back here, then you enter again, then you come down. If you come back here, then you enter again, then you bring them down. You understand? That'll be how on a normal people go fiscal for here. And so that'll be how people go fiscal for here. But they look for some pair. Then you do the thing at the talk. They look for let me see. I don't know if it be NZD USD. I mean, look for some pair. Let's see.
So come on with the current price action,
Yeah.
How you gonna analyze them?
For here.
Yeah. You go expect
for here. Yeah, for here like this, if like this candle can close below it sits for the top here. Like I just wait to make it hit the moving average, then I buy.
Like wait, make it cross or make it hit them. Make it cross.
I just put the pending order on arm safe. You see the buy stop. You see I put pending order for the already safe.
Okay.
So once it hits and pay, just they trigger and move for me. But because of this thing for here, I make skeptical small because of this thing for here.
Yeah.
But on a normal you go fit in an hour's time, you can't say this thing still can't close for up here.
Yeah.
But if can't close for up here, I see long can wait trigger my pending order for here. Now go fit just go my real accounts, then I go buy for it. But because of this candle for here, if like it just be weak, this candle still sits on top of the Asian high for here, like I just go buy.
Yeah.
But like I said, it's the day long. So the market for place for do some price action for this place before it go come out again. So I still go expect it go come play for here before it go come out, then hit the movie and reach then go.
Then go
before it go hit the movie and reach then go. So me, I always relax them. So mostly what I do be they use pending orders on like if I expect some move, I set pending order on my demo. Then I watch how they behave. Then I monitor them at price action and everything before I go pull the trigger on any move I see. If I will pull the trigger on, you can see GBP CHF. This is here, safe. You go see here. I try buy for here. You see what they try talking. I set pending on. You know work. So you come. But here's a BB demo, so I'm not stressed plenty. But on the normal, this be what's behind the top. If you come out, we can't hit them. But here's if on the normal, like as this whole candle enter here, like I for ignore them because on the normal, I don't like if the candle, I don't like if wick rather enter here. But if the candles all sit on here, that when they buy, make it go back.
Yeah.
That when they buy, make it go back. This be another example of the move I talk. Say it go come out, then it go back, go touch the moving average, then it go drop
again before we drop. Yeah.
So it be one of the breakouts. It will go back, go retest the moving average or the Asian low. So one of the ways if you actually trade this thing with a break and then retest.
Yeah. Okay.
Break and retest.
Makes sense.
So it go break the moving average. Yeah, I say break. It go break the Asian high or low. Go break the Asian high or low. Then it go retest the high or low or the moving average.
Yeah.
You understand? The high or low or the moving average. So different ways there you go to trade this thing. Then you go to use your chart patterns as well.
Of course.
Because on a normal, the reason why these lines they be the main reason why the high and the low they before breakouts.
Yeah.
You understand? But you realize it go reach time where the breakout to the expect it no go happen. So now if you just trade down like the way they trade the H4.
Yeah.
Now you go to just include the price action things, or you go now you know say now you go to include your support, your resistance, your because if you watch here, you see if you watch here, this be another rising wedge. If one of the popular, I be like this, the most the easiest chart pattern actually they form on the moving average one. This is the main chart pattern almost the form. So now you just consider the whole thing. So you watch here to start to the coincide plus the moving average.
Moving average, yeah.
Now, so now if you won't be sure, say this thing actually go drop. Now here on the normal, my pending order just go day this thing top. Opinion on that just get a moving average stop. Sell stop. So once it breaks the price I see here, that be your way. What do you see? Like I said, it will come out, then it will go back, can retest. So now your initial, you see, you started do this thing, you go just close your profits, then you go wait, make it come back, then you go enter again. Simple.
Again, yeah.
Because on a normal here, you don't really want to do swing trading for you. You want to do your day trading, make your quick money, and then be done.
Yeah.
That's what you actually want. So you just for the apply. So now, like I actually just watch this thing for a while. I see how it moves. So now I just they apply most of almost all the principles I talk about today. They apply them on them. Because now you see you almost have a confluence on this because you see drop, it rises. So you see a rising wedge here. Once you have your rising wedge, now you're looking at how it ends up on the moving average. So you see it touched the top of the wedge for here. It drop, enter the Asian low, you have your moving average there. So that way you're pending on that day. Or if you actually the monitor in real time, once it gets there, you can just sell. So you selling here, GBP CHF, how much profit have you already made? 30 pips. Are you okay? So after 30 pips, you realize that it goes back. Make like coincidence, go touch the moving average, where it drop again.
Yeah.
Understand, where it drop again. It continued the next day, it come out, reverse, go touch the moving average, where it drop again. You understand me? And then this trade has been dropping since because I don't know if you remember, but do you know I gave this trade yesterday? Last week. I gave GBP CHF last week. Here.
Yeah.
Funny thing, my entry. I don't know if you remember that trade about give up. It go like
I remember.
So you see, then here to be my entry. So I always apply. So if you watch here today, see double top, triple top along the moving average. So then my entry day. So as I enter for you already now, right now it break and we come down because I enter for you already. So my stop loss be small. So I know the stress plenty because when the stop loss day, I go handle them.
Yeah.
So now if you go to H4, but so where the funny thing is if you go to H4 top, you just go see wick. By the resistance for the H4. I just go see wicks. You just go see wicks for the H4 inside. So more people go figure are just jumping on the trade. If I go back, the things are right for here, go clean. So I don't know. I should go show you how they look for the H4 top. You make a show you how they look for the H4 top. You see my screen. So you see this triple top in the resistance. So now this is where they are there. So me, I enter for this wick inside safe. Like as I enter, I did this for I enter, you go see for the MA, they look clean. But if you come here, somebody go figure you just can't stand here because you figure you drop, but then see you get some tools.
You have some confluence,
So now this whole move drop coming here. The next day, the one that went to touch the MA again and drop was here. The one that went to touch the moving average was this zone. So that whole consolidation in the box again to touch the moving average was here, and then you were able to catch it. And then the next day also, it went back to touch it. So that week, I'll show you in this. So people will just see week, but you get the Asian range, you get the moving average. So now you get to see more trace if you catch easy. But the main thing I want me to see for here, as I enter for the moving average, the signal and they here. They here. So anybody who will see for here figure me and just the enter, but they don't know say this thing they we actually they use. So this thing will be really, really solid. This thing like so like you really for use them like so here then he just my entry triple top here. I had this candles consolidating here, so I have a confirmation here right on the moving average that I enter. So by the time you can reach SF, you understand? By the time you go do this thing can reach SF, you've already made some pips. GBP CHF 16 pips, so you're already in profits. Where you watch out, you go handle it. So right now you come out as you do this whole consolidation. You make some 35 pips before they do this whole consolidation because you watch at this move. If you miss them, you miss them. You don't give another opportunity. Can't reverse, can't do anything. Just as some people go enter for this after this consolidation. But you realize you look at the consolidation, it even looks like bearish. It's even there's not a single bullish candle in there. You understand? So you realize this can move if you miss them, because you know every day we go give you nice price action for below this thing, the Asian range. But sometimes it will give you this thing. If it give you this thing, the solid thing you go for trade. If it give you this thing, because break, test, drop. But here, once the breakouts happen, so here because I was able to catch it, because I was able to understand the price action here, then apply my resistance, my chart patterns here, I was able to catch it before it broke the Asian range.
Mm.
Understand me? I was able to catch it before it broke the Asian range. And then here, the next day, you realize, what do I see? I woke up the next day, I saw another rising wedge. It broke the same moving average again, formed the low, went back to retest the Asian range, but a week went to touch the moving average, then it dropped again. Understand? So
Come on, quick question,
yeah.
You see, there was a triple top technically on this side before it dropped.
Yeah.
Why were you mostly possibly not tempted when we had a double top to go in and waited for the triple top? Because you see, when we had a double top here, some small bearish kind of break the MA before we get. Yeah. No, go to the left, to the top, the big drop.
Yeah.
No, all the way, the very huge drop. No,
the left,
to the left.
right.
The
previous day.
No, the previous day. Yeah. You see, so go to that. You see, we have triple top for there before it drop. Yes, that candle. You see that candle break the MA. But then, if you were watching this thing, wouldn't you think that would be the move?
Oh yeah. Means luckily for me, I can't see them from here. Me, I just did say Rick send me his screenshots of in MSC. Oh, what a teacher now. He sees similar things, so make I go watch. So I can't do. I can't see them from here, but I would have entered here too. But the reason why I wanted to stress was because my stop loss is still small.
The stop loss is not too far.
But I would have entered on a normal. If I was watching it in real time, I was monitoring from the beginning. This would have been my entry.
I see.
This would have been my entry.
So
I realize this
MA is it 89?
This 89.
That's the only one. Is 89. So on a normal means like I go enter for here, but I can't meet for here.
For here, that's where my challenge was, because then the drawdowns and the cycle was going back.
Because here the good thing is the drawdown no plenty, so
no be huge. Yeah.
You know, go give that. That was the reason why I actually like the analyzer for from the top to the down, because now I know see because here, even here, luckily the whole box is small. For the past, but if it be the big box on, if it be like this, if it be like this, where I can catch, I want sell for here. Where you go back, I come here. That'd be like 30 pips drawn down.
That'd be huge.
You know, everybody in your account if you handle 30 pips based on how much you risk. But it might have been too much. So actually, they are.
But I really like this one. So the entry should have been. You see the evening star be to the right or something.
Yeah. So here on the normal, it should have here once you see the box, and then the way the trick is, if you wake up in the morning, the size of the box tells you everything. You see the size of the box.
Yeah.
So once it's huge, you know that you need to start doing your analysis from the top.
From the top, yeah.
At the very least, you should catch your trade on the movie.
Somewhere there.
You shouldn't wait for the breakout before you catch it, because it will, because it's in the morning, and you know it will come back to fill the space here. It will do something here. So to be on the safer side, if you catch it on the line, you know that if it reverses, it's just 20 pips draw down. If it goes, you make profit, so you can handle it. You understand? You know you can handle it. So actually, it'll be very, very advantageous if the box is small, because the box just represents price action during the Australian session into the Asian session. Like from 10 p.m. they go, because they start 9 p.m. You understand? So this whole thing, where you see that time to market not really be active, because then they open the spread, plenty things they happen. So the market just do whatever they like. So the whole price action for here just to show you the high and the low of price when we are asleep, mostly when we go to bed, because it ends at 4. This thing they end at 4 a.m. Understand? So this thing, once this thing ends at 4 a.m., you know that the whole box represents the highest price and then the lowest price. The lowest price, from midnight to dawn. You understand? From midnight to dawn.
The question is, you know they trade on Mondays.
Well, they trade every day.
They trade every day. This one, I know why they trade.
Yeah, they trade every day. Oh, if this thing if I see opportunity, I go trade. I go to. I don't really
see anything.
Because of the huge drop that happened on Fridays, it looks like they're continuing. NFP looks like they're continuing. Oil still they drop, but oil comes support now. So now I say no really touch the support, but where it falls.
You if you analyze oil for we on this same concept.
Okay, where oil?
Oil, they love them, but they fear them at the same time.
Yeah, myself, I really they like oil. But if you discipline your body,
go against you go respect.
So you see, now if I come here, if I come to my H4, I'm seeing it do this. So you realize my support day here. But at the same time, where they reverse, once I see this whole price action, and they look like Fibonacci's in a way they play out. So because every day the market will come your exact support. But you see this price action for here, they tell me see solid bullish presence they come. So I come back to my NA, you see the pattern I talk of.
Yeah.
You see the pattern I talk of. It go come out, then go can't hit them again, then they go up.
Yeah.
So now here, to be on the safer side, I just wanted to get really close to the moving average, even if I'll not place my penny around. So even since I get buy for there already.
Yeah.
So I get buy for here already because I expect it will go up. So the same pattern at the top. You see, come out as it touch them, we are buy. But I they wish say like the moving average day somewhere here, so that it will be easy for me to trade it. So the first thing I do is I just check the pips from where it is now, or from the moving average to the Asian high. If it's not more than 100 pips, I don't say I will handle. Then I just place my stop loss right at the bottom here. But on a normal, if you dey trade for your H4 self, like your stop loss go day here. But if you like 120 pips,
that's a lot of pips.
That's a lot of. So my stop loss, if I go trade, I go day here, but it just depending on that on this one. You understand? So depending on that day here, buy stop. So a day on this thing, buy stop. If it hits, they can just buy from. So I'm penning on this thing as buy stop. But like I said, this penning I set up on my demo account. With my real account, I want to see how the markets will behave before. But looking at the H4, you still the CC if I be buy. But that be all. That be what I do because I don't really see any proper chart pattern. I don't really see apart from this pattern at the top of if it comes. It will come retest stamp, then we'll go up again. So if I actually make the consolidation plain to self, once the consolidation is a lot, at least it takes closer to the moving average.
To the moving average,
also keep dropping because the moving average will also keep dropping because it's moving. So it also keep dropping. Once it gets closer, I'll just buy when it gets to the moving average. Once it gets to along this region, I can also just buy because now so you need to right now you give me signal make a monitor set. So oil be the pair I'm going to monitor this morning because at the expensive this thing. At the expensive you do this thing. So I watch them for a year while.
Charlie, come on. Make we have a deal. I would love make you do this from time to time, but for more like exchange value for value.
At least once a week. At least once a week.
Yeah, before exchange value for value. We could talk behind the thing, then see what we can do. Yeah.
At least one because it actually be very good if you get somebody you watch the markets with. If you have someone you watch the markets with, they help. So I would prefer if once a week we go watch this market.
Exactly. Exactly, because the whole thing. I mean, Wilder, you see, no, you be trading by the do. Because the potential I see for the trading inside.
Yeah, the potential be extremely huge. Like it be extremely huge.
The things I learn with things I know. If I have even let's say $500,000, if I have $500,000 by 3 years, I will make something like 100 million.
Oh yeah.
Because
you get the aggression. You get the aggression where you get the knowledge. So
I tell you, the crypto world, the things you did there. Wait on my businesses, some things I want to do and things, Charlie. You will go see what could go happen. Because now to RDC say like the prop firms to possibly then they help small.
Oh yeah,
even if you didn't need capital.
Yeah. If one of those things if you just risk like you see
quick.
This go take bigger risk because really be your real money like that. So
Yeah.
Because if you go Nigeria, that's what the Nigeria boys they do. The Nigeria boys or prop firms then change them and trading life.
Yeah. And so if you use the prop firm, just make your money, then we will move into the right direction. You know. It be
prop firm like this. The prop firm like this, they target high leverage trading position. Like position where say it is solid, where it will happen. That be how they trade prop firm. That be how they trade them. So I know the ratio.
So imagine in the trade prop firm, what strategy you go still use the H4 or you go still use this one?
Oh, I go use here. I don't watch the H4 set because the H4 they take patience then plenty things. So the reason why I go use here is they apply my H4 concepts for here. So it be the same thing. We're here to if you see trade where you enter no it drop.
If you really
of course. Very well. You enter one of the things I talk. This is a ESF. It come out here. Then the opportunities plenty. It come out first one. It come back and touch.
It can't retest now. Boom.
That drop alone from here to the bottom was what 150 pips. I go trade. This be something I would trade for my prop firm. But I get the patience. I go feel wait, make it can't touch them before I go trade them.
Yeah, of course.
So as it come out first one, now I just they put my pending order for top like this. So I just the right click, and the positive thing about the MT4 is you just right click. So it just did top like this. So now I'm not saying if you hit them, no, it be risk I take. Even if I miss myself, now the next one you say drop again, you come back. The next one you come back for the one you use both the moving average and then the Asian low. So now if this whole consolidation day we hear say maybe maybe your stop loss day don't put. But even if you know the stop loss, at least they expect the whole consolidation for you. You see here where yes it was in the night. It dropped to the next like it actually went into the Australian session. So this one will be around 8 p.m. It'll be around 7 p.m. to 8 p.m. You understand? It'll be around 7:30 p.m. in the evening. Wait. The next one is that. But like the best one was here. Once it dropped, you just wait for an opportunity. Like the patience for day, because more people
you
can't enter. If you come in, the patience just to wait make you can't touch them again for day. So what I mostly do be say if I get
but it no be every time they touch them.
It no be every time. Sometimes you just don't come down. Like sometimes they do this they do this for you, then it will come down again. But as I see the moving average for you, so if I set one for you, I dey set another one too for the moving average top in case it hits here where it break and touch the moving average. But if they go, I just go to 2 positions. But that one if I still they target them for here. So that part of least resistance thing we do, I still they apply even that thing for here. I just they apply all my concepts for here. But the whole point with this pattern, say if you come out, it come back up small before
you respect again.
It almost happen every day for a lot of the pair stop. Either they touch the low, either they touch the moving average, or sometimes it's just a reverse fall. Like make us see if I will see example. Sometimes it's just sometimes you don't go touch the high or the low, just go maybe it come out for here like this. It come out for here like this. Then I just go come do this, then they go down again.
Just pull him
indirectly. You go see say the Fibonacci, but they forget to go apply Fibonacci for this thing.
Fibonacci.
Understand? By the Fibonacci. And I say Fibonacci go simply apply, because if you did trading top where they apply Fibonacci for 15 minutes, like you go do them, but because
of course
you see the high and low and this for years, so they ignore say you go apply the technical analysis concepts for here. But if like, all right, make a say make I just right click and remove this thing, the templates, and I just do this thing. You go apply your Fibonacci concepts for top.
Of course.
You see your Fib concepts, you go apply for top. If you know the CD, but once the lines come there, like more people they forget say like it actually be the same market, it actually be the same concepts. No, you go apply for top. So that whole thing be Fibonacci, that drop where you go back go touch them, or you go back go hang for anywhere they come out, it be Fibonacci. So that whole thing be Fibonacci. So just the simple thing if they apply them. So mostly
for fit to go again and again, make it just sink into the psyche. And I realize that when things like psychology they kick in, it they fit to make you forget almost everything.
Of course.
Like maybe you see some trader they go well, then the rest of the day you forget everything.
Even here like this stuff, it be the same Fib. So you go either catch for here or for here stuff. But it be the same Fib. So it be just here situation like this, with the opportunity where it happen over and over and over again. The funny thing is say plenty traders they want to see something like this, but on a normal it's one opportunity. If you miss them, you go. But something like this, you actually go trade, you go come and you can see another one, then you go catch. You can see another one, then you go catch. You can see another one, then you go catch. But here, if you miss them, you don't go to do anything again. You will buy the same break and then retest, like you said. The same. But the reason why here in trading in a way go be unrealistic to say, unless you just jump plus your confidence, see
exactly,
you don't get any reference points. You don't get any reference points. But it's always safer to have a reference point.
A point,
So
exactly.
Now, if you don't have any reference points, you can simply just take your entry here on the moving average. It'll be the same NFP season. Once you make your moving average more than 200 pips on oil, you've made it. And then the funny thing is, I traded this. Oh, was it here? No, I traded this oil. No, okay, I traded this one rather. That time, because that time every day class where I think show could just see I see opportunity on oil on me at the end. And then if you not,
how the new class go?
Oh, they go, but I be like they're not they don't be engaging like
fire no days like
they're not they like one class
because your group
bullet association
because your group like you know see say questions they come like questions
they come
scenarios planes because you people actually they trade as you they learn but then more do them mind like they just they can't sit down can't listen.
I see say women they inside too.
Yeah, women they inside. The women say actually problems because it had because like you say your group your group they be just smooth because you teach now, you know, say people they go practice and then the next day you can ask
and
questions,
people to possibly do homework enough.
Yeah,
exactly. So then they come, they know what they want. They know me like
yeah. Because engagements will deal like that. We go see say you teach somebody this thing, you show them say make you apply this thing, this.
But and I'm thinking say sometimes you will do some pre this thing interview. Then you got to decide where
I told Kojo that thing. I told Kojo because say somebody go talk say he not be beginner.
But you could sit down, ask him the basics.
Now you they explain leverage to somebody. Now you they explain pips to somebody. So it be problematic because now you they if now somebody they explain pips.
And what you guys can do is you see like even the whole trading view tutorials. You go feel record them. You have your recordings. You have the pips, everything. So if then come up, pay $100, then we give you access to this video. Go watch 2-3 weeks and then come on the program. You know what I mean? So it will help you, then help them.
Yeah, because it really they make the class stressful sometimes. When this week I've Kojo the travel, so me I will handle this whole with the stress alone.
Oh yeah.
So how be that Niger guy, you know? Oga Niger.
Jeff. Jeff.
No, he don't be Jeff.
Jeff. Not Oga Jeff. Oh,
come on. You don't know Oga Jeff. That Nigerian guy, they always see the front seat there where he say the thing they teach, they don't understand.
You remember Oga Jeff.
I remember. Be like, Mr. Howard sit down advise him sometime. Then as
me down the link.
Straight down the link.
Hey, he be movie producer. He be producer.
Hey, the guy get money.
The guy get money.
The Nigerian people, wait, me, my whole issue be say every time when they talk, say if you know, say if I talk, say it be you, like be the only people they ask me any question.
Yeah.
But if you people they ask me any question, I always they talk say if anybody get a question, make it text me on Telegram. Say nobody they text me on Telegram. Nobody they ask me anything. The whole class we have, this be the you are just do Zoom class. Nobody they worry me say, oh, you know they understand this concept. So nobody.
Oh, then they bullet.
You see, and that thing it should be everybody in perception of life anyway. People, if you see the body of knowledge, when you get that body of knowledge, that will convert. No. The aggression I take come that place,
Yeah.
Because I get a body of knowledge, but the body of knowledge not be convert.
So as Kojo do, you say Kojo shoot some YouTube video plus you say they talk say, oh, somebody come all the way from UK, then people know they believe. Like that. Sure, people come all the way from UK so that they can learn. Sure. You get access.
Get access. You go pick them. They around. You know they see things top. Hey, Charlie. So come on, make her not waste your time, man. We go feel racial things, but for talk, how we go put value on all these things. Yeah, I beg you. Make we not waste your time. We gotta respect the whole move, then the help. You know. So we'll go see what we can do. Okay then. All right. So might be free today.
Oh
yeah. I will link up with you in due time. I'll go into some meeting, so I will link up with you in due time. Then we'll go pick things up from there. Thank you so much. Yeah. All right. Cool.
Ale, come on, we go link up. We go link up.
Yeah, sharp.
Me say if I for count there.
Yeah, looks up.
Mm.